You are listening to chartingwealth.com for Monday, the 18th of July, 2016. Where do we always start? That's with IYY, which is an exchange-traded fund that tracks the entire market. We closed out the last candle of the week on Friday, the last two-day candle. And what do we see happening? Well, we have three strong up candles, a nice two-day trend line on the overall market. The market crossed over going up back on the 13th of July. The derivative oscillator crossed over going up on the 13th. And we have continued to see strong up movement on these charts. Now, what happened over the course of Friday is the market was down 0.06%, 0.6%. So it was down just barely after a strong week up. In fact, the candle that ended on Friday, the two-day candle, is still an open box green candle with a wick sticking off the top of it. So it is still strong up movement. If we look at the 4-hour chart, what do we see happening? Well, we do see what appears to be a topping out occurring. The market has stayed somewhere right around, not really going for the last 2 full days above 108, and it started moving down Friday afternoon after a red open box candle on Thursday afternoon. So we still don't have a crossover going down on the short chart. We're still above the two-day trend line, but we might be seeing what we've been waiting for, and that is that pullback on the 4-hour chart. Maybe it will pull back, move down some over the course of the next week, and possibly move back up again, and then you can catch a piece of that upward action. We will just have to wait and see. That is where we are on the total market. Now let's go back to the two-day chart. Let's take a look at the S&P 500. That, again, is up 0.13% for the day, but didn't take much off the candle. Lots of strong up movement on the last three candles. Like the total market crossed over going up on the 11th, then the derivative oscillator moved over going up strongly on the 13th. We have three candles, a good trend line, what we call our two-day trend line, and it's actually for 6 days running, and we are still well above that two-day candle. If we take a look at the 4-hour chart, what do we see going on? Close to crossing over, going down, still above the two-day trend line. Hopefully that pullback will occur. That means that the short chart will move the opposite direction of the big chart. And once it starts moving back in the direction of the big chart, that is up again, that is your entry point to hop into a trade. That is where we are as far as the S&P 500 as represented by SPY goes. Now we're going to take a look at the Qs. The Qs was down 0.16% for the day, still strong up movement. Actually, the Qs has been going up, strong up candles all the way since the 29th of June. Didn't have our crossover until right at the end of the candle on the 7th, going into Monday. Well, going into the 11th, the candle ending then, and strong up movement throughout the course of the last three candles, a week and a day. So if we look at what's going on in the Qs, let's check out the 4-hour chart there. And again, very close to crossing over, going down. Is the market topping off overall, or is it just digesting and pulling back after all that up movement? We'll have to wait and see. Still above the two-day trend line. See how things shape up on Monday. Make sure that you listen to our weekly review and forecast so you know what the weekly charts are up to. Also, what news affected everything over the last week and what might be affecting things over the coming week. So that is where we are as far as our three indexes go. Lastly, we're going to take a look at gold. Let's go to our 2-hour chart, talk about what's going on. We talked over the last few days about how gold broke the two-day trend line back on the 11th. People might be wondering, well, when do you draw a new trend line? Not until you have a crossover. Once a trend line's broken, you can't very easily draw a new one. I mean, you can, but it's not going to have anywhere near the accuracy because you don't yet have a called new trend. You only have a new trend on the big chart when there's a crossover on the MACD in one direction of or the other, up or down. So we are waiting possibly for a down movement on gold. We have had down movements for the last three 2-day candles, so right at 6 days. But we don't have a crossover yet going down, and the MACD is still technically up, as is the derivative oscillator. Now, if we look intraday, what do we see going on gold? Gold looks like it's been settling out for the last 2 days, starting on the morning of the 14th with a drop, up a little in the afternoon on the 14th, then down in the morning, and up in the afternoon on the 15th. So gold has been hovering around a base of about 126.54. Hasn't gone below that. Now, if gold turns around, the derivative oscillator is losing some of its downward momentum, but the MACD and the signal line continue to move down, and the two indicators are staying apart from each other, the signal line and the MACD itself. We have to have a cross going up until we have a potential entry point if gold continues into up movement, which it may. We just don't know yet. So we'll continue to monitor gold. Gold was technically down for the day 0.38%. Now, isn't that interesting? Gold and all three of our indexes moving in the same direction. We saw that earlier in the week. So pay attention, continue to watch what's going on in the markets as we start into the new week. Like I said, make sure you listen to our weekly review and forecast so you have some idea as to what the biggest of all the trends we look at, that is the double long. It is our weekly trend. We'll talk about that there and also go through what happened over the course of every day during the week and the news events that affected the market in the past week and what might affect the market in the new week. We appreciate everybody for all of your support, signing up for and subscribing to our iTunes channel. We very much appreciate that. Also the YouTube channel. Also all of you who've given us the 5-star ratings and said nice things about us. We love to hear from you everywhere you want to speak to us, whether it's Facebook, Instagram, Twitter, YouTube, you name it, we are there. And of course, the best place to get all our information is at our website, chartingwealth.com, where you can sign up for our newsletter and receive our videos and all of our information, our training, and everything else for free. We very much appreciate you being with us. Guess what we're going to release over the course of the weekend? Chapter 1 of our book, Charting Wealth. Yes, we're going to be releasing chapter by chapter to you. Ask you to listen to it, make any suggestions, possible changes, things we need to leave out or add. We're going to get you to help us write it and put it together. Thank you so much for listening. Be sure to subscribe to the YouTube channel. Also, if you subscribe to that, all of you who do anything on YouTube, just hit subscribe to Charting Wealth. Once we hit 1,000 subscribers, we know we have several thousand listen every week, but once we hit 1,000 subscribers, we'll be able to provide you with proprietary broadcasts, and we can't wait to do that. Thank you again so much from chartingwealth.com.